This business about Goldbach levels.
In this trading strategy teaching, I'm going to show you how you can use Hoppy's Goldbach trading levels to get into long-term swing positions. Now I'm going to detail the trade that I'm currently in and the reasoning why I got into the trade. Okay. Now, this is the chart for GBP USD, and this trade took a good couple of weeks for me to plan and then wait for. But I put my full account on this trade and it's already up about 3R. So yes, I haven't put all of my personal wealth on this trade, but one of my personal accounts, the full account is on this GBP USD short. Now, how did this trade come together? Right, there's a number of elements. Firstly, because it's a long-term swing trade, I had a macroeconomic outlook. So firstly, I needed a reason to be short GBP against the dollar in particular. Okay, now these are always relative trades. Now my play was all about the potential for escalation of the conflict in Europe, specifically Russia against NATO. Now, of course, if the conflict escalates, the US would also be affected. Okay, but this is a relative play. Okay, who will be more affected, Great Britain or United States of America? Now, obviously, the United States of America is far away. The battle is not taking place anywhere close to their territory. Okay, whereas Great Britain is in Europe, so they are closer to Europe and Russia, where the conflict is. And their economies will be more affected due to trade breakdown, supply chain breakdown in Europe. Okay, so that was my first place. So between Great Britain and the United States of America, Great Britain would be more affected. And obviously when we have war events take place and turmoil, the flight to quality will go towards the dollar. Okay. Relatively speaking, the Great British pound is more of a risky asset than the United States dollar. And to fund the war, Great Britain is more likely to print a lot more money on a relative basis speaking than the United States. Okay, so that was my first play. So what do we have here? Okay, let me set up my charts to show you all the indicators. So the indicator I like firstly is the imbalance indicator. That just shows me where the imbalances are. Okay, now when this candle closes, so I've gone back in time to exactly when the trade took place. So when this candle closes, we will have a fair value gap here also. Okay, a bearish fair value gap. Okay, what else did we have? We had this liquidity swept by this candle into this bearish order block, weekly bearish order block. This is a weekly chart. Okay, so we've had liquidity swept into a bearish order block. I want to be short. I am looking for an entry. Okay, I don't execute unless there is a Goldbach reason to enter. Okay, now let's open up the Goldbach levels. So the indicator I like is AMD Power Free Goldbach levels, this one here. And I know GU on the higher time frame is running on the 729 half shifted. Okay, if you would like to understand the intricacies on how you know whether it's half shifted or not, and exactly what my golden bullet time and price trading strategy is, which I use for Forex, I use it for index futures now. I'm actively trading index futures, works for crypto, works for gold, works for scalping, works for swing trades, right? If you would like to know that, there's a link to my mentorship program in the description to this video. Okay, so it's half shifted, but the way this indicator works, you've got to say it's a negative half shift. There we go. Now, so we've had a sweep of liquidity into this order block. And if you are a follower of my channel, you know that the Goldbach algorithms are very important. One of the algorithms, the easiest one to understand, is algo 2. 2. And what does algo 2 do? It goes rejection block to the breaker block, returns to the fair value partition, and the logical termination is the opposing order block. Okay, now what are the important levels? Okay, the breaker swing is not that important. Okay, I'm really looking for something of us into the high. It makes his move, leaves a fair value gap in the fair value gap partition. That's where I'm looking to enter, and then the logical conclusion is the bullish order block, which we formed down below. So what do we have here? Okay, we have an order block here at the order block level. And look at this fair value gap, right where the fair value gap partitions say it should be. So this is a trade I planned out with my trading group, detailed it all the way weeks in advance, and I showed them myself getting into the trade also. So where's the fair value gap? There's your weekly fair value gap. Okay, so there's a number of components to a trade. Okay, I need for a swing trade, I need a macroeconomic reason, a global reason why currency should move so violently. Okay, I need everything to align in terms of Goldbach, but I also need a catalyst. So I took this trade during the weeks of CPI and NFP. Okay, there's none of what I'm saying today is financial advice. I'm not scared of CPI or NFP. I like those catalysts because that moves price in the direction I wanted it. Okay, so I needed to be tapped into this trade, and then I needed CPI and NFP to make the big move. Now, why is there going to be a big move? Is because when it comes to these long-term trades, price moves quickly away from them, so you can't get into the trade. Okay, while everyone else realizes what's going on, it's too late, the price has moved. But I knew about this trade in advance because I've been planning it and I've been looking for it and I've seen this time again. So how could you have come into this trade? Okay, once you had all this reasoning in place, you are looking for price to come back to the fair value gap. That's where you come in. Okay, so this would have been so you could have entered here. You could have put your stop here, and it depends where you want to come off. Okay, now the logical place that the algo 2 terminates is the opposing order block, the bullish order block. Okay, so that would have been a nice 4R trade. So how did this actually play out? Okay, so this is when I identified the trade, and let's now move to the 4-hour time frame to show you how wild the price action was. Okay, so I was not in the trade at that point. Okay, I was looking for CPI and NFP to give me my entry and then the move. Okay, so let's play this out. So it left the gap. I'm not tapped in yet. Now I'm tapped into the trade. Now you'll start seeing some big moves. The first move was NFP. There's your NFP, and I thought, okay, now I'm clear. Okay, so this is where we are now, and how did we? So this is the price action as of today, and what does it look like on a weekly basis? That was the move. Look at this huge move during CPI and NFP. Okay, remember the markets are fractal. Okay, so strategies that work on lower time frames also work on higher time frames. It just depends on the trade you want to get into, and how long you want to hold it for, and how much attention you can pay on the chart. So I like having swing trades running, because while the swing trade is taking place, I can then focus on my golden bullets on the day-to-day basis, where I get, 1 or 2 golden bullets, easy golden bullets every day on Forex and index futures. Okay, now it depends where you want to come off this trade. You may want to take it off at this fair value gap here. So we're actually in the fair value gap. Okay, because you're going to get retracements. Now, do you want to sit through a massive retracement until you wait for the logical conclusion of the algo 2. Right? It's up to you whether you do or you don't, or you just want to take your money and then put on another trade. So where are we? Okay, so we filled this fair value gap already. So maybe that's where you want to come off, which in that case, it's a 1.7, 1.8 R trade. You might want to take it off at this order block, this bullish order block. It's a 2R trade, or you may just hold on until we get to the bullish order block down here, as per Goldbach. Okay, because that's what algo 2 tells you. That's the kind of trade you want to get into. Okay, so let me recap this trade. I had a macroeconomic reason why I wanted to be short GBP against USD, and that was the escalation of the conflict between Russia and NATO in Europe, where my thesis is Great Britain will be more affected than the dollar or than the United States. Okay, I saw a sweep of liquidity into an order block, and that aligned with a Goldbach algorithm. So I knew exactly where my entry would be in this fair value gap. It's a true fair value gap. And then I had a catalyst which would allow price to move. That was CPI and NFP. Okay. If you would like to learn more about Goldbach, there's a link to Hoppy's official book in the description of this video. If you would like to join my exclusive mentorship program, you can join that also by using a link below.